Good afternoon, guys. Let us start. Okay, so what are we going to do today? We'll finish off GST, okay, a little bit concepts of tax invoice, okay, then e-way bill. E-way bill is not there for you guys. I just check your syllabus. Okay, e-way bill is not there. Then debit note, credit note, and then how to use your electronic credit ledger, electronic cash ledger, and electronic liability ledger to pay off your GST. That we'll see today. That we'll do today. Okay. So tax invoice, you guys already know a bit about tax invoice. Okay. You guys know a bit tax invoice. Okay. So we'll see when to issue a tax invoice, when to issue a bill of supply. Okay. Then when to issue a debit note and when to issue a credit note. So we'll see the difference between these four documents. These are the four documents for GST. Actually, there are 5 documents for GST, okay, including a e-way bill. So I'll just give a brief idea about e-way bill, okay, because that is a new concept. Even though that is not in your syllabus, I can just tell you quickly what is a e-way bill. All right. So these are your 5 documents for GST. These will be needed when filing returns. Okay, these are needed when filing GST returns. So in the last lecture, we saw about GST returns. Tell me quickly, GST return 1, 2, 3. So we have GSTR 1, then GSTR 2 or 2A, 2 or 2A. Okay, then we have GSTR 3. Okay, then we have GSTR 9, GSTR 9, and then we have the GSTR for other persons, like NRTP, etc., composition scheme dealer, etc. Can we discuss homework question as well? Did I give any homework question? I don't remember giving any homework question. No, no. Which homework question you are talking about, Gauri?
No, so I was studying for my honors paper, so I had no clue that you have given or not. Sorry.
Oh, okay, no problem. So there was no homework. I was supposed to give, but even I forgot, and no one reminded me. No one reminded me that, sir, you are going to give homework or whatever. Okay. So quickly, GSTR1 is for what? GSTR1 for showing what? Tell me, guys. Are you forgot or what? Outward supply, na? Outward supplies. GSTR1 is for outward supplies. It will show me output GST. It will show me all the details of output GST. Correct? GSTR2 or 2A is for what? Inward supplies. Correct? It will show me input GST. It will show me input GST. GSTR3 is for both and payment of tax. Payment of tax. Right? Tax payment after ITC. So we can claim ITC over here. We can claim ITC and make the payment over here. Output GST minus input GST, and then tax paid. Tax paid will be in GSTR3. And GSTR9 is for what purpose?
The annual returns.
Annual returns. GSTR9 is for annual returns, right? And then GSTR10 was separate. That was only in case of cancellation of registration. Okay, so that we don't need periodically. Okay, these 4 returns for a normal person, for normal registered person. For normal registered person, these are the 4 GSTRs, and there are other for other persons. There is GSTR4 for composition scheme dealer, composition scheme dealer, right? Then there is this GSTR 5, 6, etc. Okay, so etc. I will not go into the details of that. For these four are important for you guys. Huh? I have given a list for other persons also. I have given a list for other persons also. Okay, GSTR 1, 2, 3 will be monthly. 1, 2, 3 will be monthly, and this will be annually. This will be annually. And GSTR 4 for composition scheme, is it monthly or annually? Or
So quarterly.
correct, it is quarterly, or it's
So,
quarterly. Yes.
and today we discussed with our college ka sir. So he said we
Hmm.
don't have composition dealing for the exam.
Okay, no problem, no problem. But you should still know na composition scheme there, because when we do registration, right, the limits are different. Na? So composition scheme there is still there. You guys can skip that part. Then. Okay, you guys can skip that part because composition scheme dealer was there in your syllabus. That's why I taught you. All right.
So did you verify that are we studying from the new amended rules?
Yes, yes, I put it on the group na that day. I put it on the group that I confirm from your college whatever changes are there till September 2021 that will be expected in your exam, right? So in short, that is for 21-22. So we are studying for 21-22, and that's what I've taught you in the first 10 days also, or whatever, first 7-8 days. Okay. So the syllabus is not there for 2018-2019. It will be current syllabus 21-22. Any changes that have taken place after September 21 are not expected for you guys. Huh? That also I have confirmed. Any changes after September 21 is not there for you. Okay. All right. So we are on the right track. Whatever we have learned is amended, right? We are learning amended rules, and obviously it makes sense na, to learn amended rules. Okay. Just that the immediate amendments after September 21, the immediate amendments are not there for you guys. Okay. Because then we have to stop somewhere. Na? Even before your paper, if there is an adjustment, it's not expected that you guys will know it. Okay. All right. So that was registration. That was GST returns. Sorry, not registration. That was GST returns. Okay. Now, during returns, during filing the GST returns, we need 5 kind of documents. Okay. So these 5 documents are needed when filing GST returns. All right. Tax invoice. Who issues a tax invoice? It is issued by a normal, registered dealer. Normal registered dealer. It will be issued by a normal registered dealer. Correct. And without tax invoice, guys, pay attention. Why this becomes so important? Without tax invoice, you cannot claim ITC. You cannot claim ITC. Even if you have paid input GST, okay. Even if you have paid the input GST, you cannot claim ITC if you don't have a tax invoice. Correct? This tax invoice should contain what? The name and address of the seller, name and address of supplier. Okay. And also, most importantly, it should also contain GSTIN, GST identification number. Okay. If this GSTIN is not there, it will not account for a tax invoice. It will be a kacha bill. Okay. It will be a normal bill. Okay. So whenever you purchase something and you are paying GST, always see that GSTIN is written on the tax invoice. It can be either written on the front side or on the back side. Okay. You can check for the back side also. If it's not written on the front side, that's okay. Okay. So that's from the supplier side, and then it will also contain goods sold, goods/services sold. Okay, with description. Why with description? Because we want to know whether these are taxable inputs, right? So goods and services sold with description, then quantity and amount of goods and services. Okay, then rate of GST and GST payable. GST payable, whether CGST, SGST or UTGST. Okay. So all these are compulsory. Yeah? All these are compulsory on a tax invoice. If any of these items is missing, it will not be considered as a valid tax invoice. And if it is not a valid tax invoice, without valid tax invoice, you cannot claim ITC. Without a valid tax invoice, you cannot claim ITC. So these are the contents of valid tax invoice. If you understood, guys, what is the tax invoice? Okay, and we had discussed this. What is the last date for issuing a tax invoice? Tell me. What is the last date for issuing a tax invoice? We have discussed this during time of supply.
Movement of the goods.
Correct. In case of movement of goods, what is the last date of issue of invoice? The date of removal from factory or showroom, right? From factory or showroom. Okay. So if your goods are of such nature that they need transportation, they need actual transportation system for the movement of goods, then the last date of issue of tax invoice, the last date of issue of invoice is date of removal from the factory or showroom. Okay. And in all other cases, the last date of issue of invoice is date of delivery of goods, the date on which delivery of goods has been made. That will be the last date of issue of tax invoice. All right. Understood all concepts? Okay. This will be there in your MCQs. Huh? This can come as a part of your MCQs. So this chapter, this tax invoice wala chapter, even though it's a small chapter, okay, it can have multiple questions on multiple questions for your section A kind of questions. Okay. All right. So like I said, name and address of and GST and date of issue, serially numbered. Okay. And details of unregistered person. If there is some unregistered person, if you are making sale to unregistered person, but anyway, whenever I am going to issue an invoice, I am going to write the name and address of the customer also. Okay. Taxable value. HSN code will not do in detail. HSN code is something different. You guys don't have that. And we'll cover that in customs. Plus description of goods I have told, total value I have told, rate of tax, amount of tax charge. And yes, place of supply is also important in tax invoice. Place of supply. I've not written over here. Why place of supply is important, guys? Tell me in tax invoice. Why place of supply is important?
To know whether it's given to the third party, like, or it's delivered to us in our factory.
No. That's not the reason.
To check if it's intrastate or interstate.
Perfect. To check whether it's intrastate or interstate. So if I am a dealer of Maharashtra and the place of invoice, place of supply on the invoice is Gujarat. Place of supply on the invoice is Gujarat. Then it will become a interstate supply, and I'll have to collect IGST. Correct. And if the place of supply is in the same state as the address of the supplier, then it is an intrastate. So needed to understand whether it's intrastate or interstate. Okay. So for that reason, place of supply is also needed to be mentioned on a tax invoice. If you understood tax invoice, everything now. Also you see if you're understanding what is the last date of issue of tax invoice. All right, done. Any doubt in tax invoice, guys? Okay, and then obviously if it is a tax invoice, you need a signature or a digital signature. You either need the invoice to be signed by the supplier, or you need a digital signature or digital signature of the supplier or his authorized representative is also important. Okay, so let me add that also in our list. So signature or digital signature of the supplier is important, because if it's a company, then you will need digital signature. Okay, if it is an individual supplier, you need a normal signature. Okay, so you might be asked a theoretical questions also. Huh? Explain the contents of a tax invoice, or what are the contents in a tax invoice. Okay, all of these you will have to mention. Okay, all of these you will have to mention. All right. Any doubt in tax invoice? Clear? All right. Next, bill of supply. When do I need to issue bill of supply? I have explained this before also.
Composition.
No, not in composition scheme. I had explained either you need tax invoice, bill of supply, or debit note. Correct? So when do I need to issue bill of supply? In case of import of goods, na? In case of import of goods, not unregistered. See, if we are purchasing from unregistered customer, we'll take a normal bill, na? We'll take a normal bill, kacha bill. Okay, that is not bill of supply. That is not bill of supply. Okay, I think I explained this before also, guys. In case of import of goods, what happens? There is no concept of tax invoice. In case of import of goods, there is always bill of supply. So bill of supply will have the same contents, name and address, right? Name and address of the supplier, correct? Then same goods, services sold, quantity and amount of goods, services sold. Okay, then rate of GST. Instead of rate of GST, it will have rate of BCD and rate of IGST. Why BCD, guys? Tell me. Why does bill of supply have BCD?
Because it deals with imports.
Correct. It is basic custom duty. Na? BCD is basic custom duty, and rate of IGST. IGST is your integrated GST. Okay, integrated GST. So in case of imports, you will never have CGST, SGST, or UTGST. You will always have IGST. Okay. Here also the place of supply is important. Place of supply is important, and the date of supply is also important. Date of supply, then date on which I'll do one thing. I'll write the date wala content separately. Date of supply is important. Okay. Date on which goods entered the territorial waters. Okay, because once the goods enter the territorial waters of India, okay, you have imported the goods. You will be having the import chargeability. Okay, so date of supply is important. Date on which goods entered the territorial waters of India, that will also be required. Okay, and date on which goods were unloaded in the custom ports. Unloaded in the custom ports. That date will also be important. So in case of bill of supply, since it is import, there is not just date of supply, right? For tax invoice, date of supply is sufficient. For tax invoice, date of supply is sufficient. Okay, but here date of supply we need date on which goods entered territorial waters of India. That is the date on which the ship actually crossed your 24 nautical miles. In case of import duty, Indian territorial waters is always 24 nautical miles. And in case of GST, the Indian territorial waters is 12 nautical miles. I had explained this in the first lecture. Okay. And date on which goods were unloaded in the custom ports. That is the date on which custom authority has checked your goods. So all that will be needed in case of bill of supply. Okay, and in case of imports, we'll not just charge custom duty, we'll also charge IGST. So this bill of supply is needed for both, for customs also and for GST also. Understood the difference between tax invoice and bill of supply, everyone? Okay. Now I'll ask you a question and you guys tell me. In case of interstate sale, sale between Maharashtra and Gujarat, okay, the supplier charged IGST. So what document should the supplier issue? Tax invoice, bill of supply, debit note or credit note?
Tax invoice.
Tax invoice.
Tax invoice, right? Because even though it is IGST, it is still within India, na? It is still within India, so it will still be tax invoice. Okay, so tax invoice is also required for IGST. Yeah? Tax invoice is also required for IGST. Only if it is import, that time instead of tax supply, instead of tax invoice, we will be issued bill of supply. Will be issued the bill of supply.
Sir, in this bill of supply, the seller will give us a bill of supply, right?
Right, seller will give us the bill of supply.
But then why will he put like BCD and IGST?
Because what happens when the bill of supply is issued, what I want to know, how much will be the custom duty, and BCD is charged. BCD is charged on something called as assessable value. Just like in GST, we had taxable value. Here it is assessable value, and assessable value will be based on freight on board, correct, plus transit insurance, okay, plus loading, unloading, right? So who will be paying for all this? Initially, the supplier will be bearing all this, and then that amount will be charged to the customer. Final amount will be charged to the customer.
But then IGST
is what? IGST, anyways, for import, you have to pay two duties, basic custom duty and IGST. So we'll see, when we study the assessable value, we have this entire valuation in customs. Today I'm going to start customs. Okay. Today I'm going to start the customs chapter. In that you have this entire assessable value valuation, right?
So,
In that we'll
like,
learn everything. Go ahead.
normal tax invoice, we pay it. 1 second.
What happened? Okay. I think we lost her. Anyway, so any other doubt in tax invoice and bill of supply?
Sir, sorry. So like in case of normal tax invoices, we pay the GST amount to the seller.
Correct.
But here in case of bill of supply, we don't pay the IGST to the seller.
Correct. We'll pay to the government of India. We'll pay to the government of India.
Okay.
Correct. So that's why what happens is that from supplier, we still need a bill of supply. Correct. This rate of BCD and this column will be left blank. And when you want to take the goods out of the custom port. So for example, I have, let us say, imported to Mumbai port. Correct. So first the goods will be checked on the Mumbai port. Okay. And when the goods come out of the Mumbai port into the domestic tariff area, that is in the normal area, correct? At that time, this BCD and IGST will be charged. So anyway, before you take away the goods from the custom authority, you have to pay BCD and IGST, okay? All right. And place of supply means all places through which the goods has passed. Okay, so for example, I had imported from USA. I had imported the goods from USA, and then what happened? My ship came from USA. It stopped in Europe. Okay, and then after Europe, it came to India. So let us say in Europe, it stopped in Switzerland. Okay. So then I have to mention for the place of supply. It means I have to mention all places through which the goods have passed. So I have to say that the goods started from USA. Okay. Then there was a transit, this thing in Europe, in Switzerland, specify the country, and then it came to India. Because some countries are tax haven country. I took the example of Switzerland because Switzerland is a tax haven country. In that country, there are no taxes on basic commodities, right? Only on luxurious commodity, on rich people, the taxes will be there. So that's why we need to mention all those places. Okay. Anyway, that is not important for us right now because that comes under tax evasion. We are not learning tax evasion. We are learning the basic of taxes. All right. So clear now when to issue tax invoice and when to issue bill of supply. Let's go further and do debit note. Okay. Debit note is very easy. Debit note is when I'll just read out the chart. That will be easier for you guys to understand. So there are two concepts: credit note and debit note. As the meaning says, debit means what? The customer will be charged, customer will be payable. And credit means what? Customer will get something, right? Just like bank account. Whenever you swipe your debit card, right, you get a message that your account has been debited. And whenever you get salary or anything, okay, or Google Pay, then what happens? You get a SMS that your account has been credited. Same logic. If tax is payable by you guys, it will be in debit note. If the tax is payable by you guys, it is in debit note. Okay. And if the tax amount calculation was wrong and you will be receiving tax, you will be receiving back your tax, then that will be a credit note. Understood the difference? Debit note means you will be paying additional tax, and credit note means what? The additional tax you'll getting back as a refund. You'll be getting back as a refund. Okay. So debit note is what? Taxable value in invoice is less than taxable value of supply. So your supplier made a mistake, made a sort of a mistake. He issued, example, supplier issued a tax invoice of, let us say, 10 lakhs, and GST payable on 10 lakhs, Okay. But the actual value of the goods, as per your taxable value, valuation rules, as per the taxable value that we calculate, right? What is allowed, what is disallowed. I hope you guys remember that. Taxable value means after considering what is allowed / disallowed. Okay. But the actual value as per taxable value was 10 lakh, or let us say 11 lakh. Correct. So supplier has given a bill of 10 lakhs. Okay. But the actual value of goods as per taxable value was 11 lakhs. Means what? Means that the customer will have to pay additional GST on that 1 lakh. Correct. So customer will be debited. Customer's account will be debited with GST. So in that case, there will be a debit note. See if this example is clear, guys. Or let us say the supplier had given a tax invoice of 10 lakh by mistake. Okay. And he actually wanted to give a tax invoice of 11 lakhs. So first tax invoice will be 10 lakhs. Okay. And now, since the tax invoice was issued, time of supply was decided. Okay. So instead of amending the tax invoice, what the supplier will do? He will just issue a debit note of 1 lakh. He will issue additional debit note of 1 lakh. See if this debit note is clear. When to give debit note? Is this clear? So invoice value is different and taxable value is different. Invoice value is lower, but actual taxable value of supply was higher. So the customer will have to pay additional GST. So in this case, customer has to pay additional GST, additional GST. That's why it is being debited. And that's why it is a debit note. So this is the way to understand this. Huh? You don't need to remember, you don't need to learn this. You don't need to learn this. Debit note means what? Customer will be debited. So customer has to pay additional GST. Okay. And you can remember this example. Invoice issue was 10 lakh, but actual taxable value was 11 lakh. See if this is clear, debit note.
So can't they issue a new tax invoice of 1 lakh?
See what happens if you issue a new tax invoice. Okay, so for example, a tax invoice was issued on, let us say, 31st January. Okay, tax invoice was issued on 31st January of rupees 10 lakhs. Okay, this was issued by the supplier. Now in GST returns, what happens? GSTR1 will be filed when? For this transaction, GSTR1 will be filed. You guys tell me when? On? What is the due date of GSTR1?
Of the next.
10th of the next month. Na? So 10th Feb, GSTR1 will be filed on 10th Feb, correct? And on, let us say, 12th Feb, or on, let us say, 18th Feb, both the parties realized what they have realized, that the invoice value was under recorded by 1 lakh. Now, like I said in the day before yesterday, GST returns cannot be revised. This transaction was 10 lakh. Okay, GST has been filed on 10th Feb. GSTR1 has been filed on 10th Feb. Correct. And on 18th Feb, both parties realized that the invoice was under recorded by 1 lakh. So they cannot change this GSTR. Now they cannot revise this GSTR. Correct. So the GSTR1 cannot be revised now, cannot be revised. So what can we do? So the same invoice cannot be amended. Same invoice cannot be amended. So what the supplier will do? Supplier will issue a debit note of 1 lakh, debit note of 1 lakh. Okay, and on basis of that debit note, correct? On basis of that debit note, customer will pay GST on that additional 1 lakh. GST on that additional. See, now this example is better for debit note.
Yes, sir.
That is why if you have issued the invoice, okay, and the returns have been filed, okay, there is no option but to issue a debit note. Okay, because government, what the government will say, amount of 10 lakh was your mistake. Now both of you were negligent. Okay, and because of that you have issued an invoice of 10 lakh, paid GST on 10 lakh. As per our calculation, the GST valuation is 11 lakh, right? So you need to give another invoice, or you can just issue debit note. That's okay. You can just issue a debit note instead of giving another invoice. Okay, so this is like an adjustment. No, this is like an adjustment. It's like an adjustment. See if this understood. So same, this concept is same. Tax charge in invoice is less than tax payable on such supply. It is the same, exactly same example. Is this clear? Debit note is clear to everyone?
Yes, sir.
We are looking at different types of documents we require to file along with GST returns. Huh? We are looking at different types of documents we have to file along with the GST returns. First was tax invoice, second was bill of supply, third was debit note. Okay, now you guys tell me what is a credit note. You guys tell me. Simple. This is also an adjustment. What will be a credit note then? Taxable. Okay, so there is a doubt. So debit note is when customer has to pay more tax. Yes. Debit note is when the customer has to pay more tax. Correct. That's why it is a debit note, na? Because customer will be debited with additional amount. Yes, credit note will be what? When taxable value in invoice is more than actual taxable value of supply. So we have paid, customer has already paid, customer has paid additional tax, right? Customer has paid additional tax. So now customer is going to get a refund. Okay. So the customer should get a refund. But like I said, it will not be a refund. It will be adjusted in the next month's GST return. Okay. Government does not give the actual return. It will say that you can directly adjust in your next returns, no problem. But will not give the refund right now. Because this is not our mistake, no? This is not the mistake of the government. Same example. Tax invoice was issued on 31st Jan of 11 lakhs. And later on 18th Feb, they realized that it should be only of 10 lakhs. Okay. So then the supplier will issue what? Supplier will issue a credit note. See if the first case is clear of credit note. Okay. Example. I'll write the example. Invoice was issued for 11 lakhs. Okay. But the actual value was only 10 lakhs. Right. So 1 lakh will be the credit note. 1 lakh will be credit note and GST will be refundable. Okay. So credit note will be 1 lakh and GST will be refundable. In debit note, you have to actually pay the additional tax. Additional tax is payable, you will have to pay it. Okay. In credit note, actual tax is refundable, but you will not get the refund. It will be adjusted. The refund will be adjusted in the next return. Refund adjusted in the next return, because government says you made a mistake, right? You made a mistake and you gave us additional tax. We did not ask for additional tax. You gave us additional tax. So it is because of your mistake you have paid additional tax. We will not give you a refund. However, in the next month's GSTR, your tax liability will be reduced by that much amount. Your tax liability will be reduced by that much amount. Understood? Understood the difference between debit note and credit note? Yes or no? Okay, next. Case 2 is goods were sold. Okay, tax invoice was issued. Okay, and all the amounts were correct. All the amounts were correct. No problem. There was no error. This was not happening. This was not happening. Correct. But however, customer decided to return the goods. If customer is returning the goods, should the customer pay GST? If the customer is going to return the goods, right? Customer should not pay GST. But again, the problem is when goods were sold, tax invoice was issued, and all the amounts were correct. GST was paid. And after some time, the customer felt that I don't want these goods. I want to just return these goods back. Okay, no problem. Okay, tax invoice will not be cancelled now. Tax invoice will not be cancelled. The supplier will issue a credit note. Okay, and you will get your GST refund also. You will get the GST refund also. Okay, but not in this month. It will be adjusted in the next month's return. See if this is clear. First two cases of credit note. So GST is refundable. In this case also GST is refundable. Okay, clear. And third case is goods are found to be deficient. So goods, case 3 will be when goods are found to be deficient. Deficient means what? In quantity, right? Goods are found to be deficient. So for example, the tax invoice says, tax invoice says 10,000 goods worth rupees 10 lakhs. Okay, tax was paid. Okay, and then while actual physical verification of goods, what has happened? It was found that customer only got 9,500 goods, right? So amount should have been 9.5 lakhs, amount should have been 9.5 lakhs, and GST should have been paid on 9.5 lakhs, correct? So in this case, again the same thing, additional GST has been paid. Okay, so credit note will be issued. See the 3 cases of credit note, if you understood. In all 3 cases, customer has paid additional tax and customer is supposed to get a refund. Any doubt, guys? This will be all there for your multiple choice questions. Even this is theoretical, okay, but it will be very important for you guys to remember all this. Don't just focus on the numericals, okay? Don't just focus on the numericals. Theoretical part is equally important, because MCQ will be more about these GST returns, their due dates, registration, their limits, threshold limits, correct? Then debit note, credit note, tax invoice, bill of supply. Or you can get a theoretical question, explain the difference between a tax invoice and a debit note. What is the difference between tax invoice and a debit note? That kind of question can also be expected. All 4 documents clear? What is happening today? Is it clear or not, or is it confusing? Clear? All right. You guys are a bit less responsive today. Is it because of your exams? Are you already tired for the day? Okay, anyway. So these are the 4 documents, and the fifth document is e-way bill. E-way bill. Okay, this is not there for you guys, but I'll quickly tell you in one line. In one line, you should know. E-way bill will be issued when there is movement of goods. There is actual movement of goods from supplier's place to the customer's place, right? And the value of transaction is more than 50,000. The value of the transaction or the value of the goods is more than 50,000. In that case, e-way bill is compulsory. E-way bill is compulsory. Okay, your transportation vehicle cannot move out of the factory without an e-way bill. If you are transferring goods from supplier's place to customer's place and the value of the transaction is more than 50,000, you cannot take out the goods from the factory without an e-way bill. Okay, otherwise there will be a lot of interest, fine and penalties. E-way bill is compulsory. So e-way bill becomes compulsory in the above case. Becomes compulsory in the above case. Okay, done. So this is not there, but still just the fifth document was important. So that's why I have written this. You just have to remember e-way bill in case of movement of goods, right? Movement of goods. Okay. And when the value of transaction is more than 50,000. Okay. So only these three terms, movement of goods and more than 50,000. Only this remember, you need to remember this. You will have to get the e-way bill. You'll have to get the e-way bill. Okay. So that covers all our documentation part. That will cover all our documentation part of GST. Okay. Then comes ledgers in GST. Very easy. Ledgers in GST is very easy. First is electronic liability ledger. Then second is electronic credit ledger. Credit ledger. Okay. And then third is electronic cash ledger. Electronic cash ledger. Okay. I'll give a simple example, guys. I'll give a simple example. You guys can understand what is the electronic liability ledger, which amount to put in this ledger, which amount to put in electronic credit ledger, and which amount to put in electronic cash ledger. Okay. So example, example. Let us say that output GST collected was 10 lakhs, or let us say output GST I'm talking about now. So output GST collected was 1,50,000 or 1,80,000, let us say. Okay. And eligible input GST paid, was, let us say, 1,45,000. 1,45,000. Okay. So in electronic liability ledger, let us see what happens. In electronic credit ledger, let us see what happens. And electronic cash ledger, let us see what happens. So output GST collected from the customer was 1,80,000, right? It means what? It means supplier collected 1,80,000 from customers. 1,80,000 from customers. Okay. And needs to pay 1,80,000 to the government. Everyone agrees with this part? Output GST collected was 1,80,000. It means what? Supplier has collected 1,80,000 from the customer. Okay, supplier has collected 1,80,000 from the customer and needs to pay 1,80,000 to the government. So what is the liability of the supplier? Before input tax credit, what is the liability of the supplier towards government? 1,80,000, na? Correct, 1,80,000. Towards government, the liability was 1,80,000. That is amount collected from customers. Collected from customers. So that will appear in electronic liability ledger. Now, let us say input GST paid was 1,65,000, but only 1,45,000 was eligible GST. Was eligible input GST. Now you guys know what is an eligible input GST. You guys know that, right? In electronic credit ledger, which amount should appear? 1,65,000 or 1,45,000?
1,45,000.
Right. Only that amount of only that amount which I can take as credit. Okay. So input GST was 1,65,000. Input GST paid was 1,65,000, but 1,45,000 was the eligible input GST. Eligible means what? Eligible for ITC. Eligible for input tax credit. So only 1,45,000. Only 1,45,000 will appear in my electronic credit ledger. See if you guys have understood all of this. So here entire output GST will appear. In electronic liability ledger, entire output GST will appear. Entire output GST collected will appear. And in electronic credit ledger, only the input GST, which is eligible for ITC, will be recorded here. Okay. And in electronic cash ledger, what will happen? Actual payment of tax. Actual payment of tax will be through your electronic cash ledger. Electronic cash ledger. So that is 1,85,000 output GST minus 1,45,000 eligible input GST. 35,000 will be the actual payment of tax through electronic cash ledger. See if this is understood. Any doubt? All right. So these are all the documents and ledger. Huh? This is one of the chapters, one of the last chapters. All the documents required while filing returns and all the ledgers while filing the returns and paying the GST. So whenever I file my GSTR1, see what I'm saying. Pay attention now what I'm saying. Whenever I'm filing my GSTR1, details of outward supply and details of output GST, my electronic liability ledger will be updated. Correct. Once I have the details of output supply and details of outward supply and output GST, my electronic liability ledger will be updated. When I claim ITC, my electronic credit ledger will be updated. So 1,80,000 is my entire output GST collected, Okay. And 1,45,000 is only the eligible input GST. It is only the eligible input GST. The total input GST was 1,65,000, but out of that only 1,45,000 was eligible. Okay. Then I have to make actual payment of 1,80,000 minus 1,45,000. I have to make a payment of 35. That payment will be made through electronic cash ledger. Okay. Just like you have ledgers for accounting, here also GST there are ledgers for payment of tax. Any doubt in all of this that we have studied today? Okay. So I'll assume that there is no doubt, because you guys are not asking any doubts today. So I'll assume that there is no doubt. Should I move ahead then?
Yes, sir.
Okay. What happened here, guys? Today I am not finding you guys having any interest today. What is the issue? Or is it because it's purely theoretical? That's why your interest is a little bit down.
So we are tired.
Tired because of exams. Okay. Right. So this was anyway the end of your GST. Yeah? End of the GST. Can we continue in next class? Next class what? Only 1 hour. We are not even completed 1 hour of class. Huh? And please log in with your names. Huh? Who is this Samsung? Please log in with your names. Okay. All right. So now, guys, now actually we are going to start with custom. So that is a bit interesting. That is a bit different from GST. Okay. GST, all the major topics are done. All the major topics of GST are done. Whatever is there in your syllabus is done. Your syllabus has a last chapter, Introduction to Advanced Ruling. That is not required. Introduction to Advanced Ruling is not required for you guys. Okay. Because it is advanced level of GST. Okay. So that is not required. Okay. So let us start with customs then. So I'll open up a new sheet over here and I'll start with customs duty. Custom duty is interesting because customs duty, you guys need it in real life whenever you are coming from out of India. Okay, whenever you are coming from out of India, either you are purchasing anything, right? You have purchased that is imported from outside India, right? Or you are carrying it as a baggage, okay, that is accompanied with you during coming back to India. Okay, so in any case, if you have imported goods from outside India or you are carrying the goods back to India, in both cases there will be customs. In both cases there will be custom duty. So for example, if you travel through international flight, I think many of you must have traveled through international flight. So do you get a declaration form? Before landing into India? Yes, right? So what does that declaration form say? That what all are you carrying back into India, right? What are the things that you are carrying back to India? Okay, so that is what? That is for the purpose of baggage. Okay, and if you have imported goods into India from outside India, then that is your normal imports. So customs duty, your customs duty will be on any kind of goods. These goods might be purchased, okay, or carried as a baggage. It can either be purchased or it can be carried as a baggage. All right. So for this, again, we'll need to see the definitions. Two definitions will be important. Number one will be definition of goods. What is the concept of goods? And second will be definition of taxable territory. What is the definition of India? The definition of taxable territory. All right. So you guys tell me, you guys already know the definition of taxable territory. What will be taxable territory in case of customs? We have discussed this before also.
All land, space.
All land. So all states and union territories, right? All states and union territories, including the land, including number one, land. Okay, then territorial waters. And how much will be the territorial waters in case of customs?
24 nautical miles.
Perfect. Here it will be 24 nautical miles, and here it will not be 12 nautical miles. 12 nautical miles was for GST purpose. Okay, territorial waters up to 24 nautical miles, right? And in case of oil extraction, oil / petroleum / any kind of liquid extraction, it will go up to 200 nautical miles. It will go up to 200 nautical miles only in case of oil or petroleum extraction. Customs waters will go up to 200 nautical miles. Okay, so that is the definition. That is the definition of taxable territory in case of customs. Taxable territory in case of GST was completely different. Taxable territory in case of customs is completely different. Okay, now let us understand the definition of goods. Okay, so goods will include all kind of movable property, including money. Including money. See the difference between definition of goods under GST and definition of goods under customs. In GST, it was all kind of movable property. Excluding money and securities. It was all kind of movable property excluding money and securities. Here goods will be all kind of all kind of movable property, including money. So if you are bringing foreign currency into India, if you are bringing money into India, okay, then that will also be taxable under customs. That will also be taxable under customs. Okay, so there is a restriction on how much cash you can bring. There is a restriction on how much cash you can bring. So if you are coming back from USA and you are bringing something like 400,000 US dollars, 400,000 US dollars, you'll have to pay customs duty. All right. It is not actual BCD, okay, but that is a separate type of custom duty you will have to pay. That's why people say that there is a restricted amount of money or a restricted amount of things you can bring back to the country. Even gold, okay, restricted till one point of time, gold will not be taxable, but after one point of time, gold will also be taxable. After certain value, gold will also be taxable. Okay, that all we'll see when we see the concept of baggage. When we see the concept of baggage, we will see all that. How much jewelry you can bring back. Okay, how much jewelry you can bring back, how much money you can bring back, how much worth of gold you can bring back, how much electronic items you can bring back. Okay, because what happens, this had to be amended, because government of India found out that most of the Indians go to Dubai and bring back a lot of electronic items, okay, just to save tax. So that's why even same was in case of gold, right? A lot of Indians go to Dubai, a lot of Indians go to these Middle East countries and bring back gold, okay, bring back a lot of gold, right? So government said that is not allowed. It was allowed till late 90s. It was allowed till late 90s. Okay. But after that, the government said that is not going to be allowed. Only a certain level, we will allow you duty free. Only a certain level, only a certain value will allow you duty free. Over and above that value, you will have to pay customs duty. Right. So goods, you can bring money, no problem. Okay. But that will also be chargeable under customs. See if these two definitions are clear. These are completely different from GST. Yeah? These definitions are completely different from GST. Have you understood? What is the difference? GST, this was excluding money and securities. In GST, the definition of goods was excluding money and securities. And the definition of taxable territories was up to 12 nautical miles. 12 nautical miles. And there was no third concept. In case of oil and petroleum, this concept was not there in GST. So that's why definition under customs changes for goods, changes for taxable territory. So if you understood till here, guys. Okay, yes. Let us move on then. Let us move on. Once we know the definition, right, we can actually start with the customs. All right. So I think this taxable value is a bit different than GST. So do you want to know what is the baggage rules? Should we do that today? Baggage rules. It will be a bit interesting. How much money you can bring? Okay. Till what point of time you will not be caught by the airport authorities, correct? And after what point of time you can be caught and asked to pay the duty. Okay, so that is a bit interesting. That is a bit interesting baggage. So baggage rules. Okay, these are separate from your normal import rules. Okay, normal import means what? I am sitting in India and I am purchasing something from outside India. It is getting delivered to me in India. Okay. And baggage means what? Baggage means the passenger, okay, or even the crew members. Pilot cannot bring whatever amount he or she wants to bring. Even the crew members have a restriction. The passenger or even crew members have certain restrictions of bringing money / goods into India. Okay. And if they cross this restriction, it will no longer be duty free. They will be charged baggage duty. Okay. A lot of time you get to hear that celebrities are caught at the airport, okay, and they are asked to pay taxes, right? And then they tweet about it, that we don't have the right to bring anything into India. Obviously not. You don't have the right. Then you are smuggling it. If you are bringing something into India duty free above a certain limit, you are smuggling the things into India. Obviously, airport authorities will catch you, right? So that should not happen. That's why government has given the baggage rules. Okay. And this is not just for for learning customs. You should be aware of these rules when you're traveling internationally. So next time you say that we have to unnecessarily pay so much of taxes, it is not unnecessary, it is logical. Okay, so I'll just input the baggage rules. Very simple. All right. So these are the baggage rules for India. These are the baggage rules specifically from the Indian point of view. If the passenger is arriving from countries other than Nepal, Bhutan, or Myanmar, okay, these are the countries which are neighbors of India, right? So if you are arriving from countries other than Nepal, Bhutan, or Myanmar, different baggage rules are applicable. And if you are arriving from Nepal, Bhutan, or Myanmar, again different rules are applicable. All right. Okay, let us see. So now let us see from countries other than Nepal, Bhutan, or Myanmar. So let us say you are coming from USA. As a passenger, you are coming from USA. Let us see how much is duty free for you guys. Okay, how much is duty free for you guys? Okay. So free allowance, I have given the situation, I have given the free allowance column. Okay. So Indian resident or a foreigner residing in India or a tourist of Indian origin. That is, a person has to do something with India, right? He's either an Indian resident or he's a foreigner who has been resident in India for the last year, or he's a tourist. He's touring India, but he's of Indian origin. Indian origin means his parents or his grandparents were born in India or undivided India. Okay. So he has to do anything with India, right? Then used personal effects and travel souvenirs. If you're bringing back used personal effects and travel souvenirs, you can bring it for free. Okay, you can bring it for free. There is no restriction. Okay, because it is already used, correct? That's why what people do, electronic items, what people do, guys, tell me, to avoid duty. Do you know?
They start using like they replace it over there, so they use the new one.
They unpack it and bring it to India, right? So if I want to bring a, let us say, camera, I want to bring a camera, what I do is I unpack the camera, right? And I show as if I use the camera and I bring it. So it becomes a used personal effect. No? It becomes a used personal effect. Okay. And if you're taking travel souvenirs, if you have gone to Europe and let us say you have bought something as a travel souvenir with you, it is free. Okay. You don't need to pay duty on it. Okay. You don't need to pay duty on it in India. Okay. So what is the free allowance? Used. The word used is important. Huh? Used word is important. If it is a used personal effect, okay, no duty in India, no problem, right? Then all other things you can bring up to a value of 50,000 for each article. Okay, up to a value of 50,000 for each article will be duty free. Anything above 50,000, will have to pay baggage duty. Yeah? Anything above 50,000 value will have to pay baggage duty. So we are saying articles other than those mentioned in Annexure 1. I'll tell you what is Annexure 1. All other things except Annexure 1. Okay. Annexure 1 is a special category of items. Okay. You can see this over here. One marked in red. Annexure 1. Okay. So that is firearms, cartridges for firearms exceeding 50 cartridges. Then cigars, tobaccos, and goods imported through a courier service. Okay. So for all these, they are goods under Annexure 1. So for them, custom duty rate of 35% is not applicable. Okay. They will be charged at 110%. They will be charged at 110%. Okay. Because these are the items that government wants to discourage. These are the items that the government wants to discourage the import of. Okay. Firearms, cartridges for firearms, cigars and tobaccos. Okay. And goods which are imported through a courier service. Because if you are using a courier service, you are not using your domestic services, right? So government wants to discourage that. So government will charge a very high rate on these. Government will charge rate as high as 110%. Okay. And for all other items, which are not in Annexure 1, correct? Up to 50,000 per article, it is duty free. Okay. Anything above the restrictions, will be charged a baggage duty of 35%. 35% on the value. 35% on the value. Okay, so the doubt is, does let me wait. What happened? Does this 50,000 rule apply to souvenirs? No, no. For used personal effect and souvenirs, there is always no duty. Okay, but you cannot say that camera is a souvenir from France. Okay, you cannot say that. Obviously, travel souvenirs are what? Small travel items specific to that country. Okay, so that is your travel souvenirs. What if you order something online? Then if you order something online, will it not fall under import through courier service? If you order something online, it will fall under import through courier service, na? And it will go in Annexure 1. It will go in Annexure 1, and that will be charged at 110%. That's why ordering something online, importing something online becomes so costly. All right. See if you are understood. And this is for Indian residents. This is for Indian residents. Okay. For foreign residents, the limit is lower. The limit is 15,000. Same concept. Used personal effects and travel souvenirs will be allowed to buy, take into India duty free. Okay. But articles, if they cross 15,000, not 50,000, 15,000. Okay. It will start attracting baggage duty of 35%. So for Indians, the value of each article is 50,000. Anything above 50,000 will start charging baggage duty. Okay. But for tourists of foreign origin, just if you crossed even 15,000, right? If you cross 15,000, then duty will be charged. And for infants of any category, Indian or foreign, infants means children. Okay. For infants, used personal effects and travel souvenirs are free, and other articles, infants don't need other articles, right? So no benefit. So if you are buying anything in the name of infant, if you are buying anything in the name of children, and that child is carrying that item, okay, then there will be no benefit. It will be directly charged to duty. See if this is clear to everyone. Jewelry does not fall under this. Huh? Jewelry does not fall under this. Jewelry rules are separate. Rule 5. Jewelry rules are separate. See if this is clear. So now guys, see, I'll write something for Indian residents / tourists of Indian origin. Okay. / what I can say, foreigner resident in India. Foreigner resident in India. Okay. So for first category, now guys, pay attention. I'll write some rules. You tell me the duty. You tell me the duty amount. Used personal effect. What is the duty? Used personal effect, no duty, irrespective of amount, no duty, correct? Then second is travel souvenirs. Travel souvenirs, again, no duty, irrespective of amount. Irrespective of amount. Irrespective of amount, right? Then third, items in annexure 1. Items in annexure 1. How much duty? 110% duty, correct? So items in annexure 1. What are the items in annexure 1? Firearms, cartridges for firearms, correct? Then what else was there? Cigars, tobacco, and import of goods through courier.
Courier services.
Yes, through courier services, right? Import of goods through courier. So these are the items in annexure 1. For them, the duty is what? Duty is 110% duty. Yeah? So you pay the supplier the entire value. You pay the, so for example, you have purchased firearms. You are importing firearms worth rupees, say 2 lakhs. So you have paid the supplier 2 lakhs, and you are paying the government what? 2,20,000 as duty. So the firearm will actually cost you 4,20,000. All right. And then jewelry rules are different. Jewelry rules are different. And then last will be all other items. All other items. Duty will be what? 35% if the value exceeds 50,000. Jewelry will be different. Huh? That's why don't learn this as other items. Okay. First, list down what are these 4 items, and then any item which is not included in these 4 items will become all other items. Duty will be 35% if the value exceeds 50,000 per transaction, per commodity. Per commodity. Okay, let us learn what is happening in jewelry. Let us do that. If you understood this, guys, till here. Baggage rules. Okay, jewelry rules are separate for male passengers because male passengers carry lesser jewelry and female passengers carry more jewelry, especially Indian females, right? So that's why the passenger rules for jewelry is different as per the gender. Okay, so if a gentleman is carrying, then again the same thing. Okay, jewelry up to 20 grams jewelry, okay, with a value of 50,000, okay, is exempt. This is for total jewelry. Yeah? This is for total jewelry. Okay, above that what will happen? Above that there will be 35% duty. Above that there will be 35% duty. So male passenger can carry up to 20 grams of jewelry. Jewelry including gold. This jewelry is including gold. Including gold bars, whatever. Any kind of gold. So for male passenger, you can bring up to 50,000 jewelry without any duty. Yeah? Duty-free jewelry you can bring up to 50,000, and anything above that will be charged at 35% duty. Okay, and for female passengers, they need to carry more jewelry, right? So for them, double, up to 40 grams with a value of 100,000 is exempt. Okay, and above that will be charged at 35% duty. 35% duty. And then comes all other items. For all other items, if the value exceeds 50,000, right, then it will be 35%. So if you understood this whole concept, is this clear?
Yes, sir.
Okay, and this jewelry rule is applicable only to persons who are outside India, for more than 1 year. If you are outside India for less than 1 year, no limit for jewelry. Yeah? You can bring back any amount of jewelry you can. If the person is outside India for more than 1 year, then only this limit is applicable. All right, but then you'll have to show cause notice that whether you had carried so much jewelry and you are bringing back so much jewelry. So only theoretically this rule is applicable. Huh? This rule is applicable only theoretically. But in real life, let us say you go out of India on, let us say, 15th June. You say that I am going for marriage of my son who stays in USA. Okay, I'm going for the marriage of my son who stays in USA. That's why I'm carrying a lot of jewelry. And then when you come back, you are showing jewelry worth what? 8 lakh, 10 lakhs. Okay, then you will have to carry a certificate that I am carrying so much jewelry while going out of India. Only I am carrying so much jewelry, and that's why while coming back also I am bringing back so much jewelry. Okay, otherwise same rule will be applicable to you also. So that's why it is always, advisable to follow the custom rules. It is always advisable to follow the custom rules. Okay, lot of these female celebrities are caught up on this rule. Huh? They say that we went to Dubai and we were already carrying so much of jewelry. We're already carrying jewelry of 8 lakhs. So when we come back with jewelry of 8 lakhs, we are not going to pay custom duty. Not allowed, because then you need to show the certificate that what was the reason to carry so much of jewelry out of India in the first place. Custom rules have become very, very strict. Huh? Custom rules have become very strict. Previously, they were quite lenient. Okay, and it was not online also. Now it has become very strict and it has become online. All right. And if this is not Indian resident, if this is foreign resident, all the 50,000 amounts will go back to 15,000 and jewelry will not be applicable. So I'll just copy paste this for foreign residents. So for non-Indian residents, tourists of non-Indian origin, and foreigners coming for India first time. Foreigners coming to India for first time. Right? Number 1 is allowed, number 2 is allowed, number 3 is same, number 4 is completely taken away, right? And number 5, for all other items, it will be, instead of 50,000, it will be 15,000. It will be 15,000. Done. That's the whole concept of baggage. Is this clear, guys? I have written with duty. I have written with the amount of duty. And baggage means whatever you are carrying in your luggage bag and also in your check-in bag. Both. Huh? You will have to give a declaration. You'll have to give a declaration if the value of your baggage is more than 50,000.
So,
हाँ.
while taking any amount of jewelry outside India, no duty will be charged.
No duty will be charged. You don't need to pay anything while carrying jewelry out of India. But then if you are carrying substantial amount of jewelry, you will have to carry a certificate that what is the reason I am carrying such amount of jewelry, and that I'll be bringing back the jewelry in certain period of time. So let us say you are carrying jewelry worth 15 lakhs out of India, right? And the mother says that is for the purpose of the marriage of my son, that I am carrying so much jewelry outside India. No problem. Then you just carry a certificate along with you that you are carrying so much amount and you will be bringing back this jewel. Okay. And if it is a lesser amount, government does not care. If you are taking away lesser amount of jewelry outside of India, government does not care. Okay. Doubt is, what about the people residing abroad less than 1 year? That's what I said, na? I think that doubt was before I gave this example. Okay. If it is less than 1 year, generally you don't need to worry, correct? But if the amount is substantial, you need to show a certificate. Okay. See, because what happens, government is always a bit worried about people smuggling things into India, right? That's why the rules have become so strict. All right, done. Jewelry in case of non-Indian residents, again the same thing. Okay, you don't have this limit. It will fall directly under other items. So all other items, this is including jewelry. Yeah? This will be including jewelry. So you don't get separate limit for jewelry for non-Indian residents. You will not get separate limit for jewelry. Okay, done.
Sir, it's written land route, no benefit. What does that mean?
Okay, so in case of land route, what happens if you are coming through land? Okay, if you are coming through land, that is in case of passenger arriving from Nepal, Bhutan, or Myanmar, they can come through land, right? Then they will not have these benefits. These benefits are only for other routes. Huh? These benefits are only for other routes. Okay, and for persons arriving from Nepal, Bhutan, or Myanmar, all limits will be 15,000. All limits will be 15,000, whether you are Indian resident or foreign resident. All limits will be 15,000, and no benefit if you are traveling by land route. That is, you are actually driving down from Nepal to, let us say, Uttarakhand. Okay, then you are coming through land, right? You're coming through land route. Then you will not get these benefits. Everything will be chargeable under duty, because smuggling through land is even more easier. Smuggling through land is even more easier. Okay. So for Nepal, Bhutan, and Myanmar, the limit is 15,000 for all, right? Wherever the limit was 50,000, it will become 15,000. Okay. And if you are bringing anything by land, it is always going to be dutiable. It is always going to be dutiable. Understood, guys? All baggage rules are clear. Okay, so this is coming to India from other than Nepal, Bhutan, and Myanmar, because these are the three countries through which you can come through land. Pakistan is not included over here because Pakistan, again, the rules will be very stringent. Okay, so coming to India from other than Nepal, Bhutan, and Myanmar will be over here. Okay, and for Nepal, Bhutan, and Myanmar, the 50,000 limits become 15,000. All other limits remain same. And if you are carrying anything by land route, it will be always taxable. Done. Any doubt, guys? Any doubt in baggage? Sorry. I think I was muted. So personal effect means clothes, laptops, camera. These will all come under personal effects. That's why I said, if the camera is packed and you're bringing it, right, it will be charged, because if its value exceeds above 50,000, it will be charged to duty. But if you have unpacked the camera and bringing it, it will become a used personal effect. Please send these pictures on the group. Yes. I'll upload it on the Google Drive only. I'll upload this charts on the Google Drive. All right, baggage chart on the Google Drive. Okay. How many chapters do we have in total? I'm not teaching you as per your chapters. I'm covering all the syllabus that I've got as a part of syllabus. Just let me open and check how many chapters you have got. So customs, you have got 8 chapters in customs. Okay. And you have got 9 chapters in GST. So GST we are done. 9 chapters of GST we are done. Customs chapters are easy. Okay. Customs chapters won't take much time. So 8 chapters in customs also. Okay. In customs, see, basically customs, what happens is baggage is one of the part, and normal purchases will be different part. So normal purchases, when we do, we'll cover all the entire chapter of valuation. We'll cover the entire chapter of valuation that time. Valuation will be there in both, in GST as well as in customs. Valuation is different. Okay. So the rules of valuation will change because the rule of goods changes. So rule of valuation also changes. All right. So baggage is done. The concept of baggage comes under valuation. Otherwise, you will say we cannot find baggage anywhere in our syllabus, because baggage comes under valuation. So valuation of duty is in 2 parts. Valuation of custom duty is in 2 parts. Purchasing normally and purchasing it as a baggage. Okay. So this is nothing but valuation in 2 different parts. So out of that baggage wala part we have done. From tomorrow onwards, we will start with normal custom duty. Normal custom duty has a more procedural part. It takes a lot of days to get your goods into India. If you're carrying the goods into India, you can do it on the same day. When you land, right? When you land at the airport, at the same day, you can just give a declaration, a checking will be done, and you can carry you can pay your duty and carry your baggage, right? But purchasing things into India takes a lot of procedural part, right? So that will be important. So from tomorrow onwards, we'll start data normal purchases apart from baggage. All right. And I hope you guys are more interactive tomorrow. Okay. If you guys are tired, just leave for some time before the class. A quick nap, power nap. Okay. Get fresh and come to the class. All right. Tomorrow's chapters are important. Tomorrow and day after tomorrow, I am going to teach you valuation of custom, numerical part. Valuation of customs, numericals. So numericals will be expected on that. Just like we did valuation for GST. Okay. So numericals up to 8 to 10 marks can be expected in customs also. So tomorrow and day after, I am going to teach you that. Don't miss out. All right. Let's end the meeting then.
Thank you, sir.
Okay, no problem.